Greetings, members one and all of the Salivation Nation. Are we at the very beginning of a new gold rally? Let's explore. Yes, this is comes to us from Barron's. We're going to take a look at this and another article to get an opinion about gold prices that continue to surge and why the rally is just getting started here. Gold surged on Tuesday, rising $49 to $1,638 an ounce. There could be further gains as more investors view the precious metal as insurance against the financial market instability at a time of ultra-low interest rates. Gold got a lift from the Federal Reserve's surprise move Tuesday to cut its key short-term rate by 0.5 percentage point, which we haven't seen in quite some time. It's to a range of 1% to 1.25%. That has fed the continuing rally in the U.S. Treasury market, with the 10-year note touching below 1% for the first time. Later on Tuesday, the 10-year yield was yielding 1.01%. Lower rates benefit gold by reducing the appeal of holding cash versus gold, which yields nothing. There are more than $14 trillion of negative yielding debt in the world, mostly in Europe. Gold has recently broken out of a trading range and is now heading near its high last week of $1,659 an ounce. The metal peaked at $1,900 an ounce in 2011. Didn't stay there for long, but it did get up to that point. We're getting closer every day, it seems like, here lately. We'll look at the markets here in a moment to see where the numbers are as of the recording of this video. The flows into gold are just getting started, says Peter Grosskopf, chief executive of Sprott, a Toronto asset manager focused on precious metals. Gold is now being seen as a mandatory portfolio insurance and not a fringe asset. That's interesting to note. Because you've heard me talk about fringe precious metals such as palladium, platinum, and rhodium. So it's interesting to hear that word in relation to gold. But, in this sense, some of these people who are buying gold now, were they in it before? They sell and they start to buy gold to kind of offset themselves, or is it new buyers? I don't know. We really don't know. So I don't know how he can make that claim. Anyways, he says that it has a long way to gain on fiat currencies like the dollar that aren't backed by anything tangible. Grosskopf says ownership of gold among institutional retail investors remains low, and few having Sprott's recommended asset allocation of 5%. The rally has not attracted retail investors. And, so that's the Sprott, who actually is a dealer they sell gold, and he has a pretty low allocation of 5%. But you've heard others talk about 35%. I actually even covered that in a prior video. Gold stocks were among the strongest groups in a weak stock market Tuesday, as it lived up to their historical hedging role. The Van Eck Gold Miners ETF was up $1.38 or 5% to $28.67. While the Van Eck Vectors Junior Gold Miners has risen $1.33 to 3.5% to $39.43. Industry leader Newmont has gained $2.78, a 6% increase, and Barrick Gold was up 3.4% to $20.52. The Dow Jones Industrial Average has fallen 631 points, is 26,071. Sprott operates gold-related mutual funds and exchange-traded funds, including the $900 million Sprott Gold Equity Investor Mutual Fund, formerly the Tocqueville Gold Fund. Reflecting the disfavor of gold, the Tocqueville Fund peaked with $5 billion in assets. There aren't many precious metal open mutual funds with the largest Fidelity Select Gold portfolio, totaling just $1.6 billion. That's paper stocks, and I prefer the actual physical. The entire market value of gold stocks globally is estimated at around $280 billion. There are an estimated 6 billion ounces of gold in the world, about $10 trillion worth. New supply from gold mines totaled about 92 million ounces a year, or about 1.5% of above-ground stocks, according to the CPM Group. So that's interesting information there. There has been little change in mine supply in recent years, reflecting political resistance to new mines and environmental issues. So, little change, but there's gold's being produced and out there. Grosskopf says that the growing demand and chart patterns point to gold hitting $2,000 an ounce. He argues that the Fed's rate action failed to lift stocks Tuesday because financial markets have entered a vicious cycle. Rate cuts have less and less impact in debt-laden economy when the government is running trillion-dollar annual deficits. That's for sure. That's true. And the $2,000 ounce prediction, I think, here is not far off what we saw even before this particular ailment related to the cerveza from Mexico started making the news cycle. So it's kind of in line there. And that's not really even been mentioned in this particular article here. Grosskopf wonders why more European investors don't own more gold given negative rates in much of Western Europe. Well, we covered about Germany, about their ability to their buying gold situation over there, and long lines for people getting gold before the penalties kick in. I have no idea why a wealthy Italian investor would have money in the European banking system, he says. It should be in gold. Grosskopf says that while funds have moved into large cap stocks like Barrick and Newmont, small cap issued remains depressed. Barrick is benefiting from improved financial performance and focus under CEO Mark Bristow, the former leader in Randgold, which merged with Barrick in early 2019. We covered that as well here on this channel. One of the benefits of gold stocks in a rising market is their leverage to higher gold prices. Production costs are relatively steady regardless of the gold price. Newmont sees $1.6 billion of annual free cash flow, a roughly 4% free cash flow yield at $1,600 gold. Each $100 move in the metal is translating into $400 billion swings in profits, it has projected. So that's interesting. And again, that's in a space that I'm not familiar with, mining stocks and the like, but we can see here, right in here, the market's about to close as of the recording of this video. And you can see that gold is up $35.70, a $2.18 increase, far outpacing the rest of the metals out there for sure. Silver, though, is still up, but not growing nearly as much. But silver is now above that $17 level, which was that floor that I talked about. But gold has been outperforming silver in this case, these run-ups. Platinum is down. Palladium is up just $1, and rhodium is down $100. Now, for the next one, the gold price prediction here. Gold hits fresh 7-year highs. Momentum turns positive. This is from FX Empire. David Becker writes here, gold prices broke out into the 10-year yield, tumbled to make fresh lows. The 10-year yield hit a yield of 0.897 as investors baked in a 50 basis point interest rate cut when the Fed meets again in 2 weeks. This follows the emergency interest rate cut the Fed announced on Tuesday, which cut 50 basis points from the Fed fund rate. The dollar continued to trend lower, breaking down and poised to test the 2020 lows. With gold prices and dollar and rates moved down, the safe haven status of gold is gaining traction. Gold broke out on Thursday, rising nearly 2% up and more than 5% on the week. The yellow metal settled at a 7-year high. Prices are poised to test the February intraday highs at 1690. Short-term support is seen near the 10-day moving average at 1634. Additional support is seen at the 50-day moving average at 1577. Medium-term momentum is turned positive. The MACD, the moving average convergence divergence index, generated a crossover buy signal. This occurs at the MACD line, 12-day moving average minus the 26-day moving average. You're getting into technical analysis here, which is an area that I'm unfamiliar. Crosses the MACD technical line. The MACD histogram generator crossover buy signal. Index has an upward sloping trajectory, which points to accelerating positive momentum. And there could be something to that. People look at these, and a lot of people look at the analysis of the charts, and they base their decisions on that, or what have you, or the markets do. But we'll see. The fast stochastic also generated a crossover buy signal. It's accelerating positive momentum. Prices can continue to rally, and there's at 67, so there that is. So basically, this goes into technical analysis, which your eyes can glaze over on that. I don't make predictions based on that, but I'm not knocking those who do. But you have to take into account the other factors, the psychological, the unreasonable factors that can also play a part, because the market is, I think, largely psychology driven. In a case such as this. But really, you think about it, there's plenty of fear to go around that's being spread around in these markets. There's no question about that. When you're seeing the prices go up, up today, down tomorrow, and I think we're going to continue to see this volatility until there's some sort of end in sight from all of this uncertainty with the economy and how it all plays out with regards to this particular cerveza infection. We'll call it that. And there you go. So post your thoughts below. Fascinating indeed. The markets are what they are. I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.